Hello and welcome to Insta TV for another financial news release with me, Anna Kasatkina. Today, risk appetite is waning on Forex. Investors are in the cautious mood. Earlier in the week, they expressed optimism amid fading fears of a hard Brexit and progress in the US-China trade talks. The Australian versus the US dollar pair reversed from 0.7110 in the Asian trade. Since early April, the currency pair is trading in a range of 0.7125 to 0.7130. At present, investors are carefully monitoring the trade talks between Washington and Beijing. Top US officials reported that the parties are getting closer to a final trade deal. Despite welcome news, investors are in the wait-and-see mood before the two largest global economies finalize the long-awaited trade agreement. Wall Street Journal reported that on Thursday, Donald Trump could unveil the agenda for the summit with his counterpart Xi Jinping. However, investors refrain from risky bets as they do not know details of the final deal. Meanwhile, yields of 10-year benchmark US Treasuries fell marginally to 2.5150% from 2.5240 in the early trading day. Today, the US is due to release data on unemployment claims for the last week. The number of applications for unemployment benefit is expected to rise to 216,000 from 211,000 previous week. The Australian dollar could find support from weak US non-farm payrolls. Besides, the latest PMIs from China encouraged experts to predict a recovery of China's economy. Such optimism is bullish for the Aussie. Meanwhile, the US dollar index is trapped in a narrow range at the level slightly above 97 points. The index has paused while the markets are evaluating economic data and risks. In the Asia-Pacific trade, traders were shifting focus away from the US currency, so it could weaken in the second half of the week. Today, the index could hit a 4-week highs at 97.50, 97.55 and retrace afterwards. Recently, the US dollar lost steam amid growing optimism about the long-awaited trade deal between the US and China. Earlier this week, traders opted for riskier assets. After a series of pullbacks from the resistance level, the dollar-yen pair is trading near 111.40. Analysts assume the pair to decline even deeper, to 111.20 and then to 110.90. The Russian ruble lost in value following the news that US Senators Van Hollen and Rubio submitted a draft of new sanctions on Russia to the House of Representatives. Nevertheless, the ruble was able to regain some losses later. The dollar-ruble pair is trading higher at 65.18. Today, the cautious mood is setting the tone on Forex. Tomorrow, the US Labor Department is due to present a report of major importance on employment in the US public and private sectors. It will certainly clear up market sentiment. That's all for now. Thank you for watching and see you back soon.